Hey guys, what's up? This is Francisco with Valorizo Capital, and today we're gonna do a market update video. We're gonna take a look at some of the major indexes such as the QQQ, SPY, DIA, IWM, and also the Nasdaq Composite. And we're also gonna take a look at some of the commodities such as gold. We're gonna take a look at natural gas, oil, and some other volatility indexes such as the VIX and the UVXY. Remember, guys, that this video is for informational purposes only and is based on my personal opinion and my personal analysis. So now that we got that out of the way, guys, thank you so much for your patience. I was out of the country for a couple of weeks. I took a well-deserved break. I went to an amazing event from Dr. Joe Dispenza. It was such an amazing experience. I had a lot of fun. I met some really amazing people, and it was a great time for me to meditate, to be with myself, to get to know myself and my emotions. And as we know, that's a very important aspect of trading, to get to know yourself. What are your reactions to certain events in your life, and also your reaction when price movements go against your position. Is really important to know how we react and how we can manage those emotions so that we can leverage all that emotional intelligence in our advantage, and then have some amazing profits in the market. So now we are here to see some charts. So let's just go through the charts and let's make this a fun and quick video so that is helpful for you, because I respect your time. So let's start here. I have the Nasdaq Composite in my charts. This is the ISIC. I'm using TradingView for this video. And you can see right here, for anyone who's new to the channel, I use two main indicators. The indicator right here on the middle is the trend oscillator developed by Sam Shames. And then down here, I have the TTM squeeze developed by John Carter. In my screen, I have the 21 exponential moving average, which is the blue moving average right here. I have the 8 exponential moving average, which is the orange exponential moving average in the chart. I have the 50 DMA, and then I also have the 200 EMA, which is a little bit here. As you can see, we have been on a really strong downtrend. And then to my left, I have the daily chart. And then to my right, I have the weekly chart. So I usually most of the times use both of those charts to understand the trend of the market. I like to look at the weekly chart to understand what is the macro trade, not exactly the macro, but for my trading style, I'm a swing trading, and I use the weekly chart to understand what is the bigger picture, right? The bigger trend in the market, so that I can position myself accordingly and trade in the path of least resistance. For my analysis in the weekly chart, as you can see right here on the right of my screen, I have the 10-week moving average, which is the purple line. I have the 30-week, which is the kind of this light blue line, and then I have the 40-week, which is the pink line right here. And then I have the same indicators as I have on the daily chart. And most of my analysis is based on what I have learned from Stan Weinstein by reading his books and understanding stage analysis, which I think is a must for all traders. It doesn't matter if you're of a swing trader or a day trader. I think that understanding that is a plus, and it's going to help you a lot. So now let's end all of that information, and let's just move into the chart. So right here I have the Nasdaq Composite, and as you can see, right, for those that have been watching my videos, you know that when the trend oscillator line, which is the black line right here, is below the EMA line, which is the red, that means that we are in a defined downtrend, right? And if we just zoom the daily chart for a moment here, you can see that we have been on a downtrend all the way from November, and you can see that we are continuously moving to the downside. So that's something really important to understand, and that's an amazing indicator for us to cancel the noise and just focus on what the indicator is telling us and what the trend and the path of this resistance is. So the Nasdaq Composite, a lot of people are getting excited because this is trying to print something that a lot of people are calling a higher low. but we have to be patient, right? We have to be patient. You can see right here, these green lines right here are just automated support levels, and the red lines are just automated resistance levels. So I use those lines so that way I don't have to be drawing a lot of lines. That way the system can do it for me. So not much to say in my opinion. I think that it's pretty clear that the market got rejected at that 10-week moving average, and you can see that we closed near the lows of the week. And so far, that's a downtrend, right? We got rejected at the 10-week right here, and you can see that we had a strong move to the downside. And I don't see a reason why not to think that this can happen again and that we can continue to move to the downside. I think it's really important for us to be patient, and then perhaps the market is going to come and retest this breakout level right here, somewhere around 10,000. I think that makes sense. And you can see that we are in a defined downtrend based on the trend oscillator. You can see right here, when the trend oscillator is above this line and it turns green, you can see that we usually have a really strong move to the upside. And right now, that is not the case. So I don't see why not. I don't see a reason to think that this is just going to turn and move up pretty quickly. So let's just take our time. For now, this continues to be a downtrend, and I think that we have to respect that and try to trade in the path and do our best to trade on the path of this resistance. Now let's take a look at the QQQ, and most of these indexes, they look the same, so we can actually go through them pretty fast. And you can see right here that the QQQ looks exactly like the Nasdaq Composite, pretty much the same. You can see right here that we got rejected at that 40-week and the 30-week, and we have a beautiful move to the downside because it was tradable, and that's what we want as traders. We want an environment that is trending. That way we can hold positions. It doesn't matter if it's going up, it doesn't matter if it's going low. We just want to position ourselves. We just want to be in a position, in a place in which we can make money, right? That is what we are looking for. So you can see that the trend oscillator is telling us that the path of this resistance continue to be to the downside. We can see that on the weekly. You can see that we got rejected perfectly at that 10-week moving average, and now we're trading near the lows. And I don't see a reason to think that we cannot at least retest these lows and then perhaps continue to move lower. Of course, if the market is able to trade above this 21 exponential moving average and I see a change in the trend oscillator, then perhaps that way I will adapt and change my opinion about the market right now. You can see right here also the SPY. This is the SPY. You can see that we got rejected at the 21 exponential moving average. And basically, right, we're trending below a 10-week moving average. That is a bear market, bearish trend oscillator on the weekly chart, bearish trend oscillator on the daily chart as well. Now let's take a look at the DIA. And by looking at the DIA, right, basically we have the same, right? You can see, and this is something, and this is what I find fascinating about how helpful understanding stage analysis is, right? Because if we go to this is the Dow Jones ETF, but if we go here, the market was telling us that it was changing trend by just looking at price, right? You can see right here, these candles are really important because you can see all these weeks, they're showing that there are sellers in the market at these levels, right? They're selling at the 40-week and the 30-week. And if you know about your stage analysis, those two moving averages are really important to define a trend. And we got rejected at those levels, and then we had a really strong move to the downside. And you can see that the trend oscillator was already telling us that we were moving into a downtrend somewhere around right here. So that's really helpful. That's a really helpful indicator. And then you can confirm it with price, and then you can take some really good action. Now the trend oscillator continues, it still is still in a downtrend, and you can see that we are trading below a 10-week moving average. Daily trend oscillator is also in a downtrend, and we're trading below a 21 exponential moving average. So we have to assume that the bears are still in control in this market, and that there are more sellers than buyers, right? So now let's take a look at ARK, which is also an ETF that I like to take a look at. And you can see that ARK is trying something here, right? But if you just look at the weekly trend has been on a downtrend, beautiful downtrend, right? Rejected at the 10-week, rejected at the 10-week. And now you can see that it's trying to base here, right? We had a really strong really strong candle here closing near the highs. That's a hammer candle. And as long as we continue to hold this low right here, I think there's a possibility that ARC might try to form a base here. But we have to be aware that bases take time, right? You can see right here that this base took somewhere around 2 years to be formed, right? This was a pretty strong base, and then we had a move to the upside. So don't expect this just to make a V-shaped bottom and then just move up. If this is going to form a base, it's probably going to be a base like this one before it has another advance. So we have to be aware of those. We have to be aware of those patterns right now. And then what is interesting here, right? We can see that the trend oscillator is trying to turn here. However, it also tried it here. And let me just zoom in here so that you can see that a little bit better. You can see that the trend oscillator, and this is beautiful, right? This has been a beautiful downtrend right here. And the market, the ARC ETF has basically just continued to move to the downside. And what is interesting right here, why it tried to move to the upside right here, tried to went above that 50 daily moving average, but then it got rejected. And right now it's trying to do the same thing, right? So since it has some occasions in which it tried and then failed, I'm going to be patient with it, right? I want to be patient. I want to see this trending. I want to see what happens when it goes to the 50 line, which is the neutral point. And I want to see this going above that 50, which is the purple line. And then I want to see it retesting that 50. That way I can see if buyers are willing to buy the retest of the 50, because as you can see here, right, price move above the 50, we retested them, but we failed. So I want to see the same thing. I want to see us moving above, retesting it. And if we held and then we move up, then perhaps there's going to be an indication of a possible counter trend rally that is going to take us to the 200 daily moving average. I think that that's a probability, but we have to give it a little bit more time. And then finally, I want to take a look at the IWM. And let me just move to both of the, let me just take a look at both of the charts. And you can see, right, that the IWM, right, we're trending below a 10-week moving average. And right here, we got rejected at that 50 daily moving average. We had a beautiful move to the downside. We had a squeeze, pretty strong move to the downside. Now we went up. We're retesting this 21 exponential moving average. And for now, just by looking at this, we have a bearish trend oscillator. We had a bearish weekly trend. We're getting rejected at the 10-week. I don't see a reason why not to think that this is looking to continue to move lower. So that's why I'm looking at the ETFs that we're mentioning here. But now I do want to take a look at the VIX and the Uvxy. And the reason why is because we actually had a pretty bearish day in the volatility index on Friday, right? And you can see right here that the trend oscillator is kind of undecisive, right? We're below the neutral level, which is 50. However, this one is unable to find kind of a trend. And I know that the VIX is a mean reverting product. However, the trend oscillator tends to catch some of the moves in the VIX as well, which are really helpful to catch the moves in the indexes. So you can see right here when we had a strong move in the trend oscillator in the VIX, we actually had a kind of an uptrend in the VIX. You can see it holding that 21 exponential moving average. And as you can see, that was on February and March, and we had a pretty strong correction in market. And then when we had a pretty strong move to the upside, that was a pretty tradable rally, which lasted somewhere around 2 weeks. We had a pretty strong move to the downside in the VIX, and we had a trend oscillator that was below the moving average, right? So that's what I'm kind to look here. I'm trying to see what the VIX is trying to do here. So far for now, it continues to be pretty neutral. However, if we are able to take out these lows, then perhaps I think that we're going to have a tradable rally in the markets as well. And then let's take a look at the Uvxy. And you can see that the Uvxy, right, is starting to get rejected at the 21 exponential moving average. As you can see, it was unable to move above that 200 daily moving average. And that is probably the 1, 2, 3, 4, 5, 6, 7. It has tried a lot of times, many times, and it continues to get rejected. And you can see that it continues to make lower highs. So this is kind of interesting, right? I will need a little bit more of information. I will need a little bit more of confirmation from the markets to try to understand what we can expect from stocks in the coming weeks. Now, we do have to be aware that July tends to be a bullish month for stocks. So I'm talking seasonality here. But of course, the most important thing right here is the market, right? The most important thing here is price. And by looking at price, we continue to be in a downtrend, right? We might get something here, but I'm using the Uvxy, I'm using the VIX as confirmation. And so far, we don't have anything solid. So until we have more confirmation, I think that we're going to continue to be chopping around. Perhaps we are under distribution, perhaps we are under accumulation. We just don't know, right? So we have to be really, really patient before we make our next move. And before we finish the video, let's just take a quick look at natural gas right here. And this is something pretty cool that I want to show you about the indicator, because right, we had a pretty strong move to the upside by natural gas, but you can see right here that the trend oscillator broke down, and it was this day right here. And now the trend oscillator is below that moving average, and you can see that the natural gas has been trending lower, which is pretty awesome, right? So even though you want to buy this dip at the 200, perhaps you can do it, right? As a dip to that 30 and that 40 week, and the trend oscillator on the weekly continues to be bullish. So this is perhaps a deep buying opportunity in natural gas if you have more of a long-term approach. And then I want to take a look at USO, which is also breaking a structure. And you can see right here that USO is breaking a structure this day right here. You can see that we have a move to the downside. We got rejected at the 21 exponential, and now we're trading below that 50-day moving average. So I do think that there's a probability that we're going to retest these lows right here, and then perhaps start to retesting these lows all the way into that 200 daily moving average. That's for USO. And finally, let's take a look at GDX, and let's take a look at gold. And this is starting to give us some pretty nice trends, right? We had a really nice trend to the upside in gold right here. You can see it right here. Trend oscillator was green. Let me just do that again. Trend oscillator was green right here. We had a beautiful move to the upside. Trend oscillator went red. Now we're having a beautiful move to the downside. And I think that's pretty amazing about this indicator. And now this one is continuing to move to the downside. And then let's take a move at GLD, which is gold. And you can see the same thing, right? We had a move in the trend oscillator right here. We had a beautiful move to the upside. And now we're having the trend oscillator going the other way. And now we're starting to have a pretty strong move to the downside. That's in gold. And then let's just take a look at SLV. Let's do that again. And you can see that silver, basically the same thing, right? We had the move in the trend oscillator, beautiful move to the upside. Then we had a little bit of chop, and then the trend oscillator moved to the downside. And now we're having a pretty strong move to the downside. So there's not much to say, guys, right? If we just go back to the Nasdaq Composite, there's not much to say, right? The market continues to be in a downtrend. The weekly trend is in a downtrend, in a pretty strong downtrend. So in order for the bulls to change this around, we're going to need some strong closes above that 10-week moving average in the Nasdaq Composite and also on the major indexes. Otherwise, bears are still in control, and I think that will favor bearish setups as well. Of course, anything can change. We can see a lot of changes this week, so let's just keep an open mind. But remember, be patient. Give the market some time to reset before you commit a lot of your money to the markets to the long side. So thank you so much, guys, for watching. I think this video was a little bit longer than what I was expecting, but thank you so much for your time. Thank you so much for your patience. And I hope that this is really helpful for you so that you can add some of these analyses to your toolbox, and you can use it for you, because these videos that I do are for you, so that way we can exchange information and we can help each other to be better traders. So thank you so much, guys, for watching. I wish you the best for the week that is coming, and I hope that you had an amazing 4th of July with your friends and with your family. Thank you so much, guys, for watching. Peace out. Bye-bye.